Hey everyone, welcome to Alpha Insights. I'm Adam.
And I'm Allison. Great to have you with us today. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
So, quick headline to kick things off. Alphabet just pushed its capital spending outlook way higher for next year, into the neighborhood of $195 to $205 billion. That number alone tells you this cycle is still ramping.
Yeah, that's a huge figure. Analysts are calling it maybe the biggest infrastructure budget we've seen from a single company. Cloud demand is roaring. Google Cloud revenue was reported up about 82% year over year to $24.8 billion. And backlog is reportedly around $514 billion.
And Alphabet also said quarterly Capex was roughly $45 billion, which it said was nearly double the year-ago quarter. But the really interesting part here isn't just the money. It's what happens when you try to turn that money into actual compute.
Exactly. Anat Ashkenazi, Alphabet's CFO, basically told analysts they've been expanding capacity for 3 years and still can't keep up. They're even renting third-party compute this quarter as a stopgap. And they expect Capex to climb again next year. Microsoft, Amazon, Meta, they're all heading the same way.
Right. So the build-out isn't slowing. The question now is not whether these companies will spend, it's whether the supply chain can absorb that spending.
Which brings us to the bottleneck, optics. Moving data between chips at hyperscale is the choke point. Copper wiring doesn't scale to the speeds and power density these AI clusters need. So photonics, things like 800 gigabit and 1.6 terabit transceivers, and then near-package or co-packaged optics are becoming mission-critical.
The technical way to think about it is that compute density has outpaced the ability to shuttle data around using traditional methods. So the industry is shifting to light instead of metal.
And a new wrinkle, Alphabet has started recognizing revenue when it sells whole TPU systems into customer data centers. That means the optical layer ships with the compute, which widens the addressable market for photonics suppliers.
Yeah, and private investors are noticing. There's a young optics company called Lumilens, founded in 2024, and it's been reported to have closed a late-stage funding round at a valuation of about $3.6 billion. Reported because not every detail is public, but the point stands. Private capital is pricing in a near-term deployment ramp.
Honestly, I was a bit surprised by how quickly these startups are being valued. But when you think of the hyperscalers' budgets, it makes sense. If Alphabet and friends keep spending, that demand has to flow down to component makers.
That brings us to POET Technologies. They're a supplier in the optical interposer layer, essentially one level below companies like Lumilens. POET has announced strategic collaborations in this space and lists cooperation with Lumilens in disclosures. But again, some of the purchase order specifics you've seen floating around were not independently verified in the reporting I read. So those should be called reported, unless you see the actual filings.
Right. There are claims about initial purchase orders and larger framework agreements, and even timing like late 2026 samples and a ramp in 2027. Those are the kinds of details investors want to hear confirmed. What's interesting is that Lumilens' warrant structure reportedly ties equity upside to future payments, which aligns both companies on execution.
Good point. POET reports earnings on August 14th, and that's one to watch. Key things to listen for are progress on engineering sample timelines, how much they're spending on manufacturing scale-up, and any commentary about fulfillment capacity. Management has been saying capacity is the near-term constraint, not demand.
Short version, the hyperscalers set the ceiling for spending, and that ceiling just moved up again. The money is there, but the physical optical layer is where it becomes real, and that's where a lot of the action will be over the next couple of years.
So if you're mapping the chain from Alphabet's Capex line down to parts and factories, photonics suppliers are a key node. Again, just to be clear, we're sharing analysis and reported details, not personal investment advice.
Right, and to add to that, watch for follow-up confirmations on those reported deals and sample timelines. Those are the signals that tell you the ramp is real versus just a lot of enthusiastic press.
Okay, quick wrap up. Together. First, big picture. Alphabet lifted its Capex outlook into the roughly $195 to $205 billion range, and hyperscaler spending is still accelerating.
Second, the bottleneck has shifted from chips to optics. Moving data at scale needs photonics, not copper.
Third, private funding and strategic partnerships are flowing into photonics, and companies like Poet Technologies sit in the supplier layer that will have to scale. Listen closely to their August earnings call for progress updates.
Got questions? We'd love to hear from you. Head over to stockalpha.ai, where you can ask us anything and we'll answer live. And while you're there, check out more market content and drop us your cues in the Q&A feature.
Thanks for tuning in. Remember, this is informational only. Analysts note these trends, data suggests this supply chain story, but we're not giving personal investment recommendations. Catch you next time on Alpha Insights.